Subramaniam, Sarasin Partners. In terms of creating job growth in Ireland from the financial services industry, I think that two key tenets, two key conditions that need to be met before job growth starts to flow through. The first one is that Ireland needs to remain competitive in terms of taxes and in terms of wages. And in the run-up to convergence with the euro area, wages have actually increased quite dramatically in Ireland relative to, say, countries like Germany. So Ireland does need to re-establish competitiveness in the labour market. The second one is to establish a measure of risk reduction in the general local economy, because that is really important in terms of signalling to the rest of the world that Ireland is open to do business with the rest of the financial community. In that regard, there has to be no uncertainty that Ireland, is not better off within the euro, and that obviously makes sense for people here, but the message needs to go out quite clearly outside Ireland as well. And the second one is in terms of the risk appetite for Irish debt. There needs to be less uncertainty regarding whether Ireland will meet its obligations or will not. We all know that there is the EFSF that will step in and the IMF, and so there is a backstop, but for some reason markets do not actually take that in their stride when setting interest rates today. But I think if you look forward into 6 to 12 months, if Ireland gets through, sort of gets the message across in terms of its competitiveness, in terms of its financial stability, then it is really quite an attractive opportunity, because there has been a dramatic reduction in the price of doing business in Ireland, and it is really much more competitive than countries that are continuing to experience wage inflation. Definitely the amount of austerity that Ireland has taken place is unprecedented in Irish history and in a global context. And I think at some point austerity can work against you, so there has to be a measure of pragmatism in terms of when you put these measures and when you take these further measures, implement them. I think at this point, definitely, with the changes that are proposed for December 7th in the budget, there are definitely enough preconditions to establishing, some measure of fiscal sustainability. But one of the key drivers of that is the cost of borrowing in Ireland. You're not going to be, Ireland cannot be viable over the long term if the cost of borrowing does not come down. And again, there are backstops to that, and sustainability is there. But it would be much nicer if actually markets believed that there was sustainability. So I think the austerity measures at some point they can work against. I think Ireland is very close to the tipping point as to whether austerity is going to work in Ireland's favour or not, because further austerity measures can just simply trigger a vicious cycle of lack of confidence, reduction in growth, and making it more difficult to achieve fiscal sustainability.